Hey guys, my name's Ravi Sharma and I'm the founder and buyer's agent here at Search Property. Thank you so much for joining me on yet another episode of Search Property TV. If you haven't already, smash that subscribe button, hit the bell icon, and smash the like button so the YouTube algorithm can do its thing. Essentially, today's video is very important. It's about the federal budget 2020, which got announced last night, and I want to talk about my analysis, my thoughts, and of course, how it relates to the real estate industry and what sort of impact it could impact for you. Also, stay tuned to the end of the video where I give you my summary thoughts and analysis of what exactly I think this not only means for the real estate industry, but also the Australian economy moving forward. Also, this might be a long video because there's an analyzing certain parts of the market. So I've included timestamps in the description below. So basically you can go down and any part that actually affects you or that you want to know about, you can go straight there. You don't need to know about certain things that don't affect you. However, I do encourage you to watch all the way through. It's a one-off video. You can watch in double speed, but it's good to know as a holistic point of view of what's exactly happening with this budget, especially if you're wanting to consider real estate as an investment choice or if you have debt currently attached to real estate. So keep watching, guys. So federal budget 2020 winners and losers. This is a very high level summary over here, but essentially winners, taxpayers, construction, vaccine, businesses, regional Australia, young people, older Australians and carers, manufacturing and mental health. Well, I guess they're taking care of young people and the really old people. So the people in the middle, which is probably the majority of people watching, not really going to get too much benefit. I guess losers, economy, of course, we were in deficit and, it's contracting. Job seeker rate, obviously that's dropped. Women, that's an interesting one. Migration rate for obvious reasons. And we've got childcare and climate and refugees. I guess climate change and refugees doesn't really make priority, especially during a pandemic like this. But, let's keep analyzing. So federal budget 2020, new home builds is in focus with government boost for first home buyers. Government assistance for first home buyers and loans to build affordable housing are at the centre of the federal budget efforts to support the construction and housing sectors. Guys, again, it's been very evident that the Australian government and the RBA will do anything for the construction and housing sector because Australia as a whole is so indebted, is so, property related and specific. It's where our attention is. And so we're trying to rebuild and recover the economy based on the housing sector. So that's why I've got so much confidence that they're not going to allow the market to just fall by 30 or 40%. The extension of the first home loan deposit scheme was one of the few housing related measures in this year's federal budget, handed down by Treasurer on Tuesday night. The scheme enables first home buyers to get into the market with a low deposit as low as 5% while avoiding lenders' mortgage insurance, with the federal government acting as a guarantor on the loans. So just a quick recap, if you don't know what this is, it's essentially a scheme that the government introduced earlier this year where they actually act as the guarantors so that you don't have to pay the lender's mortgage insurance. So normally if you pay a deposit of 20%, so an 80% loan on a property, that means you don't have to pay lender's mortgage insurance. But as soon as you go above that threshold, you then have to pay lender's mortgage insurance, which can become quite costly depending on how high you go. And at 95%, it'll definitely be huge. So the government basically came in and said, no, we'll foot the bill there. We can basically back you up. And so you can get your first home on a 5% deposit. Now, I'm not a big fan of this and I'll explain why. The scheme, as announced on Saturday, will be rolled out to an extra 10,000 first home buyers this financial year if they build new homes, with property price caps also lifted as part of the changes. This builds on the 20,000 first home buyers we are helping to purchase a home this year. The measure will stimulate activity in housing construction and is estimated to generate an additional $800 million in economic activity. Now, we've got here the extended home loan deposit scheme price caps. Initially, New South Wales, was at about 750,000, and they've now increased that to 950,000 because obviously they're looking at how much criticism they copped, where you can't really buy a house for 750,000 in Sydney. So they've increased the caps on this. It says capital city and regional centres. So again, regional centres, I'll definitely go through exactly what that means. Despite industry fears of ongoing job losses in the construction industry, there was no extension to the $680 million home builder scheme. But the budget papers flagged HomeBuilder had brought forward housing demand along with other housing policies and ultra-low interest rates, and would provide support to construction activity in late 2020, early 21. So the HomeBuilder, I think, was a pretty big fail, because what essentially happened was it got announced that you could get now $25,000 as a grant, but it would only come into effect after you've built the property, right? So it couldn't form part of your deposit. And essentially what would happen is, as soon as it got announced, some developers literally went out the next day, changed their advertising, and added $25,000 to the purchase price. So most people were like, oh, okay, so now it's worth $725,000, but I get $25,000 back. But essentially the value was only $700 to begin with. And so now they've sort of scrapped it. There's no indication that they're going to extend that. So it'll be interesting to see if that's the case. Funding for a social housing construction boom was also missing from the budget, despite being flagged by housing experts as the key way to create jobs for construction industry and support the growing number of people at risk of homelessness in the wake of the coronavirus pandemic. But the government did commit to more cheap finance to build affordable housing, increasing its guarantee for the National Housing Finance Investment Corporation by $1 billion. That's definitely a mouthful. The NHFIC, established in the 17-18 budget, provides low-cost, long-term loans to registered community housing providers via the Affordable Housing Bond Aggregator to support the supply of social housing and affordable housing. This takes the total concessional finance that has been made available to the community housing providers to $3 billion. It is in addition to the $4.6 billion a year we provide in rent rate. So they're providing a little bit of support in that sort of social housing aspect. This could potentially lead to more social housing in specific areas, and that could actually lead to areas that are in sort of more high dense areas for regional centers or in the city, capital city areas, where there's actually, welfare recipients or social housing that's provided in certain suburbs. They could eventually actually move out further, and these ex-housing commission areas could become a fruitful sort of investment, I guess. The government will spend $600,000 over the next 4 years on the two guarantee measures, along with an independent review of the NHFIC to establish whether it is meeting the objective of improving housing. This has been included as part of a job maker plan as the moves are set to drive jobs through housing. Job maker. First there was job seeker, job keeper, now job maker. How good. Although access to cheaper finance has been welcomed by the sector in recent years, industry experts have repeatedly flagged that an additional government subsidy is needed to ensure the viability of affordable and social housing, which is priced at below market rate. So I guess here, essentially, the key takeaway is social housing gets sort of subsidies from the government, and that allows construction industry to grow because they're able to go and provide this really low cost product at the end of it. So it subsidizes their costs. It means that they can on-sell it, and they basically allowed to sell it for really cheap, below market rate sort of property prices. And that's how you find some of these areas where there's ex-housing commission areas where they're selling properties, they're very cheap, and it's because the government came in and subsidized some of that. Now, how much of the quality of construction was affected by it, I don't know. But at the end of the day, you need the foundations of a house to still be up, and 30, 40 years later, they're still up. So that's how that works. Experts have also called for an increase to Commonwealth rent assistance, which has fallen well below the level of rent paid by low-income residents. This is interesting because I've always been talking about how sometimes it's actually important to understand that housing commission areas are not all bad. You get the certainty of rent because you're getting the Centrelink paying you because they're getting the rent assistance. And so during the recession or during the pandemic that we've seen, some of these areas have actually grown in rent demand because everyone went on Centrelink and welfare payments. The funds come amid a slowdown in construction activity during the pandemic recession, with population growth slowing as international borders stay closed. Obvious reasons, obviously. Dwelling investment is set to remain weak in the near term, with budget forecasting a fall of 11% in the 2021 as construction activity continues to slow and stage 4 restrictions in Melbourne reduce the level of construction activity, particularly for apartment development sites. I don't know who in their right mind is purchasing apartments in high dense sort of locations in these multi-unit, multi-story apartment development. Dwelling investment is then forecast to rise by 7% in 21. Again, very generic, 7%. They haven't said anything about states. They haven't spoken about any suburbs. So take that with a grain of salt. Under the budget measures, older Australians and those with disability, as well as their families, will also benefit from a new capital gains tax exemption for granny flats where there is formal written agreement. Currently, families often opt for informal arrangements in a bid to avoid capital gains tax when a family member resides in their home, such as when an older parent lives with a child in the same home or separately constructed granny flat. This can lead to a financial abuse and exploitation if family relationships break down. So essentially here, what we're seeing is, in order to avoid capital gains tax, right? If people are purchasing a house and then they live in that property, but then they build a granny flat at the back of the property, if they now give that out as rent, well, now they're having to pay for capital gains tax if they sold their property. However, if they don't have don't have a proper agreement with them, then it would still be classed as your principal place of residence, which is not income producing. So if, say, in 5 years' time you decided to sell it, you wouldn't really have any capital gains tax. The measure from July next year, subject to passing Parliament, will remove the capital gains impediment. The budget estimates said this would be an unquantifiable impact on recipients or over the forward estimates periods. HomeBuilder, the first home loan deposit scheme and the additional affordable housing financing will complement the government's recent windback of Australia's responsible lending laws, which the budget papers say will reduce the regulatory burden on lenders and borrowers. This paragraph alone just shows how much support and how much they're willing to throw at the construction and housing sector yet again. They do not want it to fall through the cracks. And of course, there's so many related parties in the housing sector that get affected if housing goes down. So it's in their best interest to avoid that, and that they're going to do by supporting these low-cost financing procedures and obviously responsible lending, which is axed as well, which I've made a video about on this channel. The reforms will reduce the time taken for consumers to apply for a credit and simplify the application process, unlocking housing demand currently restricted by prescriptive lending laws. The budget papers also noted housing wealth had declined only modestly as housing prices softened. Other housing measures included an additional investment of $150 million for the Indigenous Home Ownership Program for Indigenous business in Australia to deliver 360 home loans for new housing construction in regional Australia. Yet again, regional Australia, huge win from this budget. The extension will support over 1,000 jobs by unlocking financing for shovel-ready construction projects in regional Australia and increase the proportion of Aboriginal and Torres Strait Islander people living in appropriately sized housing. More jobs come at the back of new infrastructure, but it also means that there's a greater incentive for people to migrate into these areas moving forward because there's a gentrification of these areas. There are also ongoing funding to support state affordable housing services this year, including $1.6 billion for National Housing and Homelessness Agreement, $3.7 million to improve public housing in remote communities in the Northern Territory, and $237.2 million for delivery of new housing, housing refurbishments, and housing-related infrastructure in remote regions of Queensland and Northern Territory. Real estate agency Ray White backed the support for the first home buyers, saying the expanded first home loan deposit scheme would boost apartment sales as well as detached housing. Of course, I mean, I've got nothing against this particular agent or agency, but essentially apartment sales, it's the easiest thing to sell right now as a real estate agent. You've got all this support coming through from the government. You've got the low home deposit scheme. You've got, home builder packages. You've got all these grants coming in for first home buyers and flashy new apartments. So why wouldn't you buy them, right? Unlike the established market, apartment sales has been difficult this year, so it's very welcome to boost for the sector. Land was another one that really benefited from these sales. So people that were selling home and land packages, they were just flying out as soon as this home builder thing got announced. It will rebuild developer confidence to commence a construction of apartment projects. Yes, more apartments, please. Thank you. We expect property activity for the balance of the year to be stronger than it was pre-COVID. The Urban Task Force welcomed the extended first home loan deposit scheme, but called for an expansion to the Home Builder program too. The same price thresholds should be applied to Home Builder, the Tom Forrest said. Greater Sydney, including Newcastle, should have a home builder threshold price of $950,000, and the timeframes should be extended by a further 18 months to make home builder relevant to apartments which take longer to build. The Property Council also backed the extension of the first home buyer support and the home builder package, but warned slower population growth was a risk to the economy. These population forecasts underscore the critical importance of a comprehensive plan to reboot our migration program and get our population growing again. As I said in a previous video, guys, migration is going to be the key here. And as soon as borders open, we may even have a setup so that there's a one-way travel bubble. If people want to migrate to Australia, they can, but Australian citizens cannot leave. That's what I think is going to happen. The peak real estate agents body welcomed the budget tax cuts, saying this would improve housing affordability, but said even more Australians could have been helped to buy their first homes. The first home loan deposit scheme should be extended to all eligible buyers, all homes, not just new builds. I'm a bit hopeful there. Mission Australia warned the lack of investment in new social housing would push more people into homelessness. Investing in 30,000 social homes within the next 4 years is an obvious solution that will not only help to end homelessness in Australia, but will also create vital jobs in the construction industry. Despite a significant investment in infrastructure this year's federal budget to help create jobs, we are deeply disappointed the essential social infrastructure of social housing has been ignored. Social. I don't know what you got from that, but basically social, tax cuts, and home builder loan deposit schemes for apartments. Guys, something I want to bring to your attention real quick is essentially looking at regional Australia as a key winner of this budget. Now, we see farmers and rural communities will benefit from $2 billion in funding over 10 years in improving water infrastructure. Regional businesses will also benefit from the government's expansion of the Instant Asset Write-Off Scheme. Farmers looking for a clear solution to labour shortage may be disappointed with no incentives in the budget for people to go back and pick fruit or work in these regions, which, is not great. However, that said, the government is going to prioritise partner visas for people living in regional areas in a one-off change to the migration program. This change is, I guess, an indication of what's to come. What I mean by that is essentially we're going to have this migration push, and of course they're going to want them to go to capital cities, but they also want to grow these regional centres. And this is right here is suggesting exactly what I was talking about the last few months, which is that migration is really going to be focused on driving regional Australia and that growth. And they're going to do that by incentivizing people to migrate into these areas. Now, keep in mind, places like Adelaide and Gold Coast are still considered regional. So I think there's going to be a huge demand. We're already seeing it in Gold Coast, but I think that's from a more lifestyle perspective. I think we're going to see it further with migration pushing in. So I guess a summary of everything I've spoken about. Didn't want this video to be too long, but I also wanted to provide some context about what I'm talking about. We did cover off the fact that if you're following me on Instagram, which you should be, I announced that the rate cut will not happen in October because they didn't want to announce it on the same day the federal budget was announced, but it's pretty much certainty that we're going to have that cut come in November. So what does that look like? It's probably going to be about 10 or 15 basis points. And of course, some banks may decide to pass that on. I believe they will, especially if it's like a 0.1% change. So I think that's going to improve, again, affordability. It improves people's lending capacity and borrowing capacities. So that's going to, again, lead to asset price inflation. It's interesting that they're really focusing on first home buyers. This basically has three factors, right? It affects people in the sense that there's more tax slaves. If you're purchasing your own home, that's a liability. It's not an asset. So you're going to be having to work a job for the next 30 years to pay off that debt. So there's more tax slaves. That's going to pay off all this deficit. We've also got keeping high demand for owner-occupied areas. So I guess, demand for apartments. Developers get to produce more and they're able to sell on these products to more people. And then the third part is obviously riskier purchases. I say 10% is probably the maximum I would ever go in terms of for a client to purchase a property, especially if it's an investment or even an owner-occupier. But it goes even further, and I would not be wanting to go into a deal for 5%, and that too as your own occupier property, especially now. There is a bit of uncertainty still in the market, and I think if you're purchasing, say, in areas like Melbourne or Sydney, it means that if you go in and purchase a property for, say, $900,000, you put in 5%, and that's all well and good. However, if the market just slips by 7, 8%, you're going to be in debt, negative equity, which means now you're shackled in to having to work because you can't sell that property, which means if you end up losing your job, what do you think is going to happen? I don't really like that. Again, this is not financial advice. You should seek professional advice if you need that. More business income, because they're basically subsidizing people that, are on JobSeeker and they're now coming on as a new hire. So this is encouraging for people because businesses will now have more money to spend. So greater output for less cash outlay, which means hopefully we see some growth there, but it also there's no supports for landlords at the moment who have suffered during this COVID period, which was a surprise, and huge tax cuts. So huge tax cuts, meaning that more people have more income. Now, whether they're going to spend it or save it, it doesn't really matter in the sense that it all will lead to inflation. And there's more money supply in the system, more people have more money and access to it, they can either save it or spend it. I think majority of people will save it, given they aren't really equipped with the adequate financial literacy and education. They think that's the right thing to do, whereas I'd be going head front with investing into cash flow positive properties in good locations. I'm not just talking about some rural town that's in the middle of nowhere. I'm talking about good growth fundamentals that provide you the capital growth too. And as always, I thank you so much for watching all the way through. If you haven't already, please smash that subscribe button. I'm bringing out 3, 4, 5 videos a week about the Australian economy and Australian real estate. And I'm not into just negative news. I'm also about how I can educate people to sort of get more financial literacy and education under their belt. So if you've enjoyed this, smash that like button, comment down below, and of course, I'll catch you guys in the next video. Thanks, guys.